morning from Equiti. This is your Wednesday brief, and what a volatile session it was post-inflation figures, as the reading came in hotter than expected at an annual rate of 8.3% versus the 8.1% expected and the 8.5% we saw previous. It's still a huge drop from the 9.1% inflation peak that we saw early on in June. However, markets quickly reacted to the news, especially after Powell's speech at the Jackson Hole from last month, signaling that they're still going to be as hawkish to tighten the monetary policy to curb inflation. Gold prices quickly dropped all the way to $16.97, below levels of $1,700, while the dollar obviously strengthened, sending the euro and the GBP down. The GBP fell from levels of 117.38 to levels of 114, while the euro went back below parity. On Wall Street, also stocks stumbled, its biggest daily percentage drop since the pandemic. And let's take a look at some technicals, and I'll be back.
The S&P plunged almost 180 points yesterday, hitting its biggest daily percentage drop since the pandemic after hotter than expected CPI figures. It dropped below both the moving averages and hitting levels of 3,918 from levels of 4,158. Our next support levels will still remain 3,918 with the next resistance at 4,006. And then we have the RSI pointing in the upside direction, while both the MACDs and the RSI are still showing signs of weakness.